Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Tuesday, March 9th, 2021. We are seeing a big rally today. I guess this is what you'd expect as a snapback from what we've seen in prior days, with major indices recouping most of the losses that we've seen over the past sessions. There's a few things to attribute it to. First of all, we had 5 down days in a row. Those usually get corrected unless there's some fundamental reason for the market to fall. And I think an overbought market is not necessarily a fundamental reason for a market to fall. One of them also is the bond market is friendly. To a certain extent, we're all bond traders now, aren't we? If we're all obsessed with what bonds are doing. I'd heard anecdotal evidence that it'd become very hard to short bonds. So, of course, it makes sense that would make, that if there was if it was difficult to short bonds, there'd be a little bit of a squeeze. That would lead to a little bit of a snapback. And I do think that's what we're seeing. We're going to get a lot more clarity out of the bond market this week because they're going to be auctioning 3s, 10s, and 30s. Those are pretty much the key elements of the curve at this point. The 3s are a little bit out of focus sometimes, but I think we'll be looking for those to see if there's clues that people expect the Fed to tighten sometime in the next 3 years, and if so, how much. And of course, the 10s and the 30s, the 10s are what the market seems to be most fixated upon, and the 30s provide a very big clue about mortgage rates, and of course, housing and other types of long-term borrowing are crucial to the economy as well. So these are all the things that people will be watching for. I do think there was a certain amount of, book talking by a very prominent portfolio manager yesterday that led to a bit of the timing of this. I think, we've all been a little, I think, too focused on ARK Investments and their manager. But I think, she went a bit on a charm offensive yesterday. And I don't think it's a coincidence that we're seeing her biggest holdings leading the market today. Again, they were quite oversold. And now the thing to take away here is bear market rallies are short, sharp, and furious. But I really don't consider this a bear market rally. We had, maybe barely a 10% correction. It was 11% correction high to low in NDX, but this is on the back of a huge move. So that's really just blowing off some steam. And, SPX was not down anywhere close to that. Is this a relief rally, which we saw a week ago Monday, which ended up kind of leading nowhere? Or is this a genuine turnaround? We'll call it turnaround Tuesday. And this is one of these things that we won't know until the day ends and really until the next couple of days end. Is there a follow through that comes from this? Or are we just seeing sort of heightened volatility? And by the way, this is volatility. And for those of you who say, oh, the VIX is down, see, people, it's less volatile. No, this is volatility too. S&Ps are up 1.5%. If you use the rule of 16, 1.5%, there's your 24 volatility. So that's at a minimum. And that doesn't include the high-low effects. That's just close to close. So that's if we closed here. And I've been saying this both publicly and to you as readers, that historical volatility, if you use close-to-close volatility, it's understated because you don't get the full effect of the move. It's very rare that a market opens at its high and closes at its low, or opens at its low and closes at its high. That doesn't account for all the various intraday reversals. I mean, when you think about some of the reversals we've had over the last week or two, where you've had big intraday moves and the close to close wasn't necessarily nearly as dramatic. That's important. And so that's why you'll see VIX tend to overstate historical volatility. And as my friend Steve Steers likes to call it, this is what he calls socially acceptable volatility, where no one seems to mind too much if we go up in a big way, because ultimately that's what most investors want. The markets, most investors want markets to go up. And so if they go up faster, that's just better. So that's still volatility, but it's socially acceptable volatility. And so let's see where this takes us. I think the combination of the bond market being oversold I'm going to call it the charm offensive out of the ARK Investments squad, and just sort of a need for a trend to turn from time to time is what's driving things today, and we will see where it takes things over the next few days. Have a good one, everybody. Bye-bye.